Hello everyone, welcome to another video where we will be solving principles of accounts, paper 1 from May-June 2014, and this is variant 2. I would advise that it would be preferable that you watch this video till the end because we might go through different multiple choice strategies. For example, using elimination and educated guess, because these are like two most common multiple choice attempting strategies. I hope this video is helpful to you, and if you feel that this video is helpful, please give it a thumbs up and subscribe to my channel for more videos like these. So let's get started with first multiple choice. Multiple choice 1, which statement about the computerized accounting system is correct? So we have to identify a correct statement for computerized accounting system. So let's look through the options. The general ledger does not include non-current assets account. So this is not necessary because why would a general ledger will not include a non-current asset? And it's not really related to computerized accounting system. But in this multiple choice, we assume that all these statements are related to computer accounting system. Option B, the income statement always shows a profit. Now, just because you are using computerized accounting system, it's not necessary that the business will show profit. Profit depends upon expenses and revenues. It has nothing to do with computerized accounting system. Option C, the financial statement of position, the statement of financial position does not include non-current assets account. Now, this is extremely false statement. The first item, the first heading in statement of financial position is a non-current asset. So if you just read through these options A, B, and C, these are clearly wrong. Therefore, the answer has to be option D. The answer to multiple choice 1 is option B. The trial balance always balances. The trial balance always balances when you're using computerized accounting system. Option 2, multiple choice 2, which is the liability of a business? Amount owing by a credit customers? No, this is not a liability. This is a receivable. This is a receivable. Amount owing to credit suppliers? Yes, this is a liability. This is called trade payables. This is called trade payables. So answer to multiple choice 2 is option B. Multiple choice 3, a business bought a computer for office use and paid by check. How will the business record the transaction? So this is basically asking for journal entry. And if you remember the debit and credit rules, then it's very easy to make this entry. So I'm assuming that you remember the debit and credit rules. If you do not, then I have a short video on how to make journal entries actually. So you can refer back to my channel for that video and can watch the video on how to make the journal entry. So to make this journal entry, there are two things happening here. You bought you bought office equipment, so debit office equipment because there's an increase in asset, right? There's an increase in asset, and then you used it, and then you used check to buy this asset. So that's basically bank credit, another asset which goes down, right? So the answer to this multiple choice would be option B, debit office equipment, and then credit bank. So the answer to multiple choice 3 is option B. Multiple choice 4, a trader divides his ledger into sales, purchases, and general ledgers. Which statement is not correct? So we need to identify a false statement. So option A, it is easier to locate and refer to ledger accounts. So this is true. This is actually true. Maintaining the ledger can be divided between several people. Yes, this is true. I mean, you can divide up between, you can have several customers and then several payables as well, right? So option B is true. Option C, the same type of accounts can be kept together. That's true as well. You can keep same accounts together. not to say that you are combining accounts. Combining is different than keeping it together. So this is like an, let's say, an English thing here that they are using. So combining is different than keeping accounts together. So option C is true. Option D, there are fewer entries in the sales and purchases accounts. Now this is false. The amount of entries depends upon business transactions. It depends upon how many transactions business is going to have, right? So it has nothing to do with how many ledgers you keep, how many ledgers business is going to keep. The number of entries will depend upon business transactions. So that's a false statement here. Therefore, the answer to multiple choice 4 is option D. Multiple choice 5. On 1st April, Jane sold goods on credit to Martha. So Jane sold goods to Martha. They sold goods to Martha at a trade discount of 25%. Martha returned goods. So Martha actually returned goods to Jane with a list price of $200 to Jane on 7th April. So how will Martha record the transaction on 7th April? So again, a question asking for journal entry. So this is Martha. Who is Martha? Martha is a buyer, right? So this is actually purchase return. So this is actually purchase return. So you can clearly strike off option C and option D. You are left with 2 options only. So now you're down to 50. Now you need to decide whether it's answer A or answer B. Now Martha received 25% discount, so it cannot be $200. It cannot be $200. And if you look at option B, it's using $200. So you can clearly eliminate this, and the answer to multiple choice 5 is option A. So I hope you can follow this strategy here to attempt the multiple choice in your real exam, right? So the answer to multiple choice 5 would be option A. You would debit Jane with $150 and then credit purchase returns with $150. Multiple choice 6. The cash book has a credit balance of $1,500. So that means balance is overdrawn. It's an overdraft. There are unpresented checks of $350 and uncredited deposits of $150. What is the balance on bank statement? So you will start with $1,500 minus the unpresented checks $350 and then add the uncredited deposits of $150. So if you do the maths and here $1,500 minus $350 plus $150, it should come to $1,300. It should come to $1,300, and then because it's an overdrawn balance, this would be on the credit side. This is overdrawn. So the answer to multiple choice 6 is actually option B, $1,300 overdrawn. Multiple choice 7. Melissa transferred $5,000 from bank deposit account to a bank current account. So the entry for this, what is happening is bank current account debit and then credit bank deposit account. On the same day, she received a bank loan of $10,000, which she paid into the bank current account. So again, debit bank current account for the loan and credit bank loan account. So how will Melissa record these transactions? So let's look at which accounts are being affected here, right? Bank loan account, bank deposit account, and bank current account. Because the company Melissa moved some money from bank deposit account to bank current account. So there's going to be credits here. So you can actually come to these 2 options, option B and option D. You can clearly eliminate option A and option C here. So now we are down to 50-50. So we know bank deposit account is going to be credit, and let's look at what will happen with bank current account. What will happen with bank current account? Or likewise, we can look at what will happen at bank loan account. If you're receiving bank loan is going to be credited. Bank loan is going to be credited, and that money goes to bank current account, and that will be debited. So answer to this multiple choice would be option D, bank loan credit, because this is a liability, and then bank current account is an asset account which is going up because you're receiving more money. So bank current account is being debited if you look at this transaction here in both cases, and then bank deposit account credit and bank loan account credit, right? So answer to multiple choice 7 would be option D. Multiple choice 8, the following account appeared in Sue's ledger. So in Sue's ledger, there's a guy named Tony. So this is Tony's account. And if you look at this, this is actually trade receivable account. So Tony is a trade receivable. Tony is a trade receivable. In other words, Sue has to receive money from Tony. Let's look at what question is asking. Which statement is correct? So this is our question. Which statement is correct? Let's go through the options and see which statement is correct. On 12th May, Tony sold goods for $5.90 to Sue. No, Tony is buying. Tony is buying or purchasing. So this option A is incorrect. Let's look at option B. On 16th May, Sue returned goods, $21 to Tony. Sue cannot return. Only Tony can return. Tony can return goods. Tony can return goods. So again, option B is false. On 28th May, Tony received a discount of $6 from Sue. Now this sounds correct. Sue can give discount. Sue can give discount to Tony. But now we need to look at if the amount is correct and the date is correct. So let's look at 28th May. Discount $6. Yes, that's correct. So the answer to multiple choice 8 is actually option C. This is the true or correct statement. All right, so answer to multiple choice 8 is option C. Multiple choice 9. Which error would cause the trial balance total to disagree? Business stationery purchased by check had not been recorded. So this is omission. This is omission. Does not affect trial balance because you have completely omitted the transaction. It is never recorded, therefore it's not going to affect the balance of trial balance. Goods purchased on credit had been debited to the supplier's account. Yes, this sounds right. This is an error. You have purchased something on credit, but that has been debited to supplier's account. So this is something that sounds very right. Let's look at option C and D as well. Goods sold on credit had been debited to the account of wrong customer. This will not affect the balance. This will not affect the balance because the account nature is same. The account nature is same. It's wrong customer, but it's still debit nature. So this will not affect trial balance, the balance of trial balance. Trial balance will still balance even if this error occurs. So option D, the purchase of a new machine had been debited to the purchase account. Again, the nature of the purchase account and the machine, the nature is same. So option D is incorrect. Option A is incorrect. Option B is incorrect. The correct answer to multiple choice 9 is option C, where the nature is the correct answer to multiple choice 9 is actually, option B, not option C. Option C is again it will balance out. So answer to multiple choice 9 is actually option B. Goods purchased on credit had been debited to the supplier's account because then the nature of the account is different. So the answer to multiple choice 9 is option B. Multiple choice 10. Wilmer rents property to a tenant at a monthly rent of $300. On 1st April 2013, the tenant owed 1 month's rent. During the year ended 31st March 2014, the tenant paid 4,800 for the period of 1st March 2013 to 30th June 2014. So this includes prepaid rent expense. This includes prepaid rent expense. How much rent will Wilmer transfer to the income statement for the year ended 31st March 2014? So basically, interest expense for year end 2014. This question is very simple. It's only going to be 300 times 12 because there are 12 months in a financial year, and each month's rent is $300. So the total rent for 1 year is $3,600. So answer to multiple choice 10 is option 9. Multiple choice 11. Amina is a wholesaler selling shoes to retailers, which is a revenue receipt. So you have to focus. This is revenue receipt, right? So capital introduced is not, this is capital receipt. This is a capital receipt for business. Long-term bank loan, again, this is a capital receipt. Proceeds of sale from shelving the book value. Again, this is a capital receipt because this doesn't happen commonly. Proceeds of sale of shoes at the list price. Yes, the answer to multiple choice 11 is D. This is a revenue receipt. This is a revenue receipt or cash. So revenue receipt, the definition of revenue receipt is cash earned from business operations. Business operations. So what is the operation of Amina? Amina is a wholesaler selling shoes, and the money earned from selling the shoes is a revenue receipt. So answer to multiple choice 11 is option D. Multiple choice 12. The following account appeared in a trader's ledger. Provision for depreciation of machinery. So this is the accumulated depreciation account. There were no sales or purchases of machinery during the 2-year period. What does 5,100 on 1st January 2013 represent? So basically this balance, what does this balance represent? So accumulated depreciation of machinery using, yeah, so this is going to be accumulated depreciation, right? This is not a net book value because this is a provision account, not an asset account. This is the account above, not an asset account, not asset account. This is a depreciation account. So you can clearly eliminate C and D. Now you are down to 50-50. So this is an accumulated depreciation account. That's a part of it. So you have got part of it right. Now let's see. So you have to identify which depreciation method is being used. It's either reducing balance method or straight line method. The depreciation expense will remain same if it's straight line method. So let's look at the depreciation expense. The depreciation expense was 3,000, and then depreciation expense in year 2 was 2,100. This is not same. Depreciation expense is not same. Depreciation expense is not same. Therefore, this is using diminishing reducing balance method. The answer to multiple choice 12 is option A. This account, this 5,100 is basically accumulated depreciation of machinery using reducing balance method. In other words, depreciation of year 1 plus year 2 is equals to 5,100 using diminishing or reducing balance method. The answer to multiple choice 12 is option A. Multiple choice 13. Machinery is depreciated at 20% per annum using the diminishing reducing balance method. A machine costs $20,000, is sold after 2 years at book value. So the machine is sold after 2 years at book value. What was the sale price of the machine? So sale price is equals to book value. That's what the question is saying here, right? This is what it is saying. So you need to calculate the book value, and that will be the sell price, the net book value of the asset, and that will be the sell price. So how do you calculate net book value? So you will take the year 1 depreciation. So 20,000 times 20%, that's 4,000, that's 4,000. So year one, the net book value would be 20,000, 20,000 minus 4,000 equals to 16,000. That would be the net book value at the year end two. In year two, at the year end one, so in year two, you would again charge the depreciation expense on 16,000. So 16,000 times 20%, 16,000 times 20%. This will give you X dollars of depreciation, and then net book value would be 16,000 minus the X dollar depreciation, and that will give you a net book value. So let's see what this number comes to. So this number actually comes to 12,800. So the answer to multiple choice 13 would be option C. You can calculate the depreciation expense here. I'm going to keep this as a secret so that you can practice and calculate this number by yourself. Accounting is about practice, so you should practice. So 16,000 times 20%, this will give you some number here. So and 16,000 minus X dollars, this will give you the net book value of 12,800. The question says that you sold the asset, or the company sold the asset at net book value, and the book value, the net book value is 12,800, and that's your selling price as well. So answer to multiple choice 13 is option C. Multiple choice 14. A purchases ledger control account includes interest charged by a supplier on an overdue account and a contra entry to a sales ledger control account. Where will these items appear in the purchases ledger control account? In the purchases ledger control account. So the interest charge on the overdue accounts will be on the credit side. This will appear on the credit side. And the contra entry, so the contra for credit is going to be debit. So the answer to multiple choice 14 is going to be option C. Multiple choice 15. What is prepared to show the trading results for a financial year? What is prepared to show the trading results of the financial year? So that's basically income statement. Income statement tells you the profit or loss. So answer to multiple choice 15 is option B, income statement. Multiple choice 16. Janet debtors pay the amount owing in cash after deducting 2% cash discount. So Janet received money from its debtor after deducting discount, the discount. How does this affect Janet's financial statement, right? How will this affect Janet's financial statement? So income statement, there's going to be an increase in expense because this is discount allowed. So discount allowed is an expense. So you can clearly eliminate option C and D. You're down to A and B, 50-50, 50-50. So there's going to be an increase in expense. Let's see what will happen to the statement of financial position. So trade receivable is an asset. You received money, Janet received money, the asset is going to decrease. Therefore, the answer to multiple choice 16 is option A. Multiple choice 17. A trader maintains a provision for doubtful debts of 2.5%. The provision on 1st January 2013 was $250. Trade receivables on 31st December 2013 were $28,000. At what value were trade receivables shown in the statement of financial position on 31st December? So this is asking me net trade receivables. Net trade receivables. And how do you calculate that? You take gross receivables minus the allowance or slash the provision for doubtful debts. So you will first calculate the provision for doubtful debts using the trade receivables at the end of year 2013 and the provision rate. So 28,000 times 2.5% comes to 700. So this is the provision. This is the provision 700. 28,000 minus 700. So our net receivables is going to be 27,300. 27,300. So the answer to multiple choice 17 is option B. Multiple choice 18. Which group contains only trading businesses? So selling a tangible good, selling a tangible goods, not a service, not a service. So let's look at the options. Driving school is a service business. Motor insurance agency is a service business. Vehicle repair is a service business. So option A is incorrect. We need to select an option where it's only trading businesses. Option B, driving school. No, it's a service business. Motor insurance agency is a service business. Petrol station, yes, that's a good, but again, we need only trading business. Option B is incorrect. Motor parts shop, that's a trading business. Vehicle repair shop, that's a service business. Car dealership, that's a trading business, but still, I still have a service business. So option C is incorrect. Therefore, the answer to multiple choice 18 is actually going to be option D. So let's look at option D. Motor parts shop trading business, petrol station trading business, car dealership trading business. All of them are selling a tangible good. You can see those goods, you can experience those goods, right? So answer to multiple choice 18 is option D. Multiple choice 19. The owner of a business takes good for his own use. How is this recorded? So this question repeats a lot. And by now, I would assume that you actually know the answer to this. It's always debit drawings, credit purchases. Debit drawings, credit purchases, right? So answer to multiple choice 19 is option B. Multiple choice 20. X and Y are sole traders. They decide to form a partnership and agree to share profits and losses equally. Goodwill is valued as follows. So X's business has a goodwill, whereas Y's business doesn't have any goodwill. How is this goodwill recorded in the ledger of the partnership? So, of course, debit, goodwill, that's for sure. So you can eliminate option B and option C. So it's either option A or either option D. So now you're down to 50-50. Since only X business has goodwill, it's only going to be X's capital. So the answer to multiple choice 20 is option D, debit goodwill, and then credit capitals X. Multiple choice 21. The members of a sports club pay an annual subscription of $60. At the beginning of the year, subscriptions were accrued from 15 members. During the year, subscriptions received amounted to 7,500. This included subscriptions of 240 for the following year. What will be entered in the income and expenditure account for the year? Right, so at the beginning, the subscriptions that you were due to receive was 60 times 15. So that's some number here. And 60 times 15 is $60 times 15 is $900. You received 7,500 during the year, out of which 240, this 240 is prepaid. 240 is prepaid. So we need to calculate the income and expenditure, the number, or the revenue or the subscriptions for the current year, right? So how would you do that? 7,500. So you will do 7,500 minus the previous 900, because you should have received this in the previous year, and then minus 240, which is prepaid. So this is accrued this is prepaid, and this should give you 7,500 minus 900. This should give you 6,360. So the answer to multiple choice 21 is option A. Multiple choice 29. What is the formula for calculating markup? This is really easy. The answer to multiple choice 22 is actually A. So if you remember the financial ratios formula for markup, the formula is gross profits over cost of sales. So answer to multiple choice 22 is option A. Multiple choice 23. Sarah does not keep a full set of accounting records. Which information is needed to calculate her total purchases? So from the below, which information will Sarah need to calculate total net purchases? So from net purchases or from purchases, you deduct the goods returned to the suppliers, right? You deduct, Sarah will have to deduct the goods returned to suppliers to calculate total net purchases. So the answer to multiple choice 23 is option C. Multiple choice 24. RST Limited provided the following information. What was the value of the retained profits at 31st December 2013? So need to calculate RE at 31st December 2013. So we will start from retained earnings, from the beginning retained earnings, $200,000. We will add the profit. 102,300. So that's 102,000. So that's 302,000 total retained earnings. We have ordinary share dividend paid. So minus 24,000. And transfer to general reserve as well. That is minus 20,000. So if we do the maths in here, this number comes to as 302 minus 24 minus 20, 258,000. So answer to multiple choice 24 is option C. Multiple choice 25. The work in progress of ZP manufacturers on 1st January was valued at 6,200. At the end of year, it was valued at 5,400. So 1st Jan, it was valued at 6,200. 31st December, it was valued at 5,400. So there is a decrease in value of 8,800. But this is an expense. This is an expense. And the question here is asking, what was the effect on the cost of production, right? This is going to increase my cost of production. So the answer to multiple choice 24 is option C, increase in 800. Multiple choice 26. Majid's payslip shows that the following deductions were taken from his gross pay. What is the total of voluntary deductions? So focus on this word, voluntary deductions, not mandatory. So this could be equally called mandatory, and that will change the answer, but this is voluntary. So we have to focus on this word, voluntary, from Majid's gross pay. So voluntary deductions, donation is voluntary. Nobody forces you to pay donation. So this is voluntary, $5. Contribution to pension scheme. Contribution to pension scheme is voluntary, so $15. That's voluntary. Subscription to a social club, that's voluntary, plus $2. So 15 plus 5, 20 plus 2, 22. So the answer to multiple choice 26 is option D, $22. Multiple choice 27. LS Limited provided the following information. So you have sales, you have cost of sales, and then expenses. What was the profit for the year as a percentage of sales? So you need to calculate the profit first and then divide it by the sales to calculate the percent. So it's going to be 470 minus 240 minus 90. You would have some number here, and then you would divide it. You would divide it by 470 or $470,000 to calculate the percent. To calculate the percent of profit over sales. So if you do the maths in here, the answer to multiple choice 27 is 29.79. That is option A. So 27, option A is the answer to multiple choice 27. Multiple choice 29. What is the formula for calculating quick ratio? The formula for calculating quick ratio is current assets minus inventory over current liabilities. So it's not plus. So you can eliminate option C and D. Now you're down to 50-50. You need to decide between closing and opening. The numbers come from balance sheet. Balance sheet is prepared using the closing balances. Therefore, it's closing inventory. The answer to multiple choice 28 is option A. Multiple choice 29. What is the meaning of money measurement principle? Money measurement principle. The meaning of money measurement principle is option B. Only items with monetary value are included in the account. So answer to multiple choice 29 is option B. Multiple choice 30. A trader writes off an account owed by Mustafa by debiting the bad debts account and crediting the Mustafa's account. Which accounting principle is the trader applying? And the principle here is that is being used as dual aspect, which means every debit has an equal credit. That's rule. That's the rule. So answer to multiple choice 30 is option C. I hope you found this video helpful in your exam preparation. If you like this video, please give it a thumbs up and subscribe to my channel for more videos like these. Thank you very much.